should we wait and put 20% down to buy a home so we don't have to pay PMI? Or should we go ahead and buy now with the 5% down? Why would it make sense to put less down and have to pay PMI? Well, there are many times where putting 5% down makes a lot more sense than putting 20% down. So here's an example. Let's just say you wanted to buy a home for $400,000 and you have $80,000 or $85,000 in your bank, and that's all the money in your name. That's all you have. So if you bought a home for $400,000 and you want to put 20% down, $80,000, and closing costs of, let's say, $5,000 approximately, give or take, that's all the money you have. You have no money for emergencies. You have no money for moving, no money for furniture. What if you're out of work for a month? There's no cushion there. That is not a good thing to do just to avoid some mortgage insurance. So if you could put down, let's just say, again, all you have to your name is $80,000, but you want to put maybe 10% down, $40,000, and have $40,000 in the bank. So maybe you're going to have $150 worth of mortgage insurance, or whatever it may be. In some cases, it's actually very low anymore today. The mortgage insurance premiums have come down. So it's always good to at least get a comparative analysis, look at both options, look at 5% down, look at 10% down, look at 15% down, and compare that to, is it worth it to paying every single penny of your money toward this home? Now you're house poor, you have no money for emergencies, and just to save, $100 or $200 a month, it may not be worth it if your budget can afford the PMI. The second thing to think about is sometimes people say, well, I'm going to wait and I'm going to save the rest of that money and try to get my 20% down. Let's say they only have, $40,000 in the bank or whatever it may be. The problem with doing that is it doesn't account for how long is it going to take you to save? It could take 5 years. If you think about how much income you make, what your bills are after taxes, how much do you take home? How much are your bills? Maybe you have a car payment, and you have a student loan payment, and a credit card payment. You have rent, you have insurance, you have groceries. So at the end of the day, how much do you have left over per month to save? Maybe you're lucky, and maybe even have $1,000. Well, even at $1,000 a month, that's only $12,000 a year. I mean, it could take you 4 years to save that other $40,000. So what could happen in those 4 years or 5 years while you're saving? Well, home prices go up. Rates could go up. So that home that today, even with mortgage insurance, may have had a lower payment than that same home 5 years from now, even though you're putting more money down and you have a lower loan and no PMI. If prices go up and rates go up, you just actually, counteracted all of your positives with some negatives. And you're in the same boat, and you didn't have those 5 years for your home to appreciate, which would have made you money as well. So many times putting 5 or 10% down, maybe even 15, versus saving for 20 makes much more sense, gets you into a home today, helps you start building wealth and appreciation in that home, and you are on your path to home ownership sooner versus paying rent and paying someone else's mortgage. So give us a call. We'd love to help you see what you qualify for, walk you through the details, give you some different estimates, ideas, analysis, and get you on the road to home ownership sooner than later. Rates are better than they've ever been right now. And home prices are still, yes, they've gone up, but they are projected to go up much, much more even in 2021 in the Denver metro area. So it's still a great time to get into a home. Michelleoddo, the Oddo Group, Leader One Financial, give us a call. We'd love to help you.